Hello and welcome back to Green Pips Effects. And on today's video, we're going to be talking about swing trading, right? What swing trading means and how do we do swing trading, right? So technically, swing trading is basically a type of trading for which people tend to hold prices for a very long period of time, and particularly trading the higher time frames, of course. Now, throughout swing trading, right, to be a swing trader means that you don't have that much time to sit on the chart to monitor trades and something like that. So you just you just rather wait out, right? See a clean higher time frame move, get your entry, and be gone, right? So you'll just check it over time to place stop losses of break even or whatever, right? So that's basically what swing trading is, right? So particularly, right, when we're trading, when we're swing trading, of course, we want to hold this price for for as long as it can give us. So basically, we're going to be targeting those huge moves in the market, of course. Now, saying per se, we have a bullish trend being printed, like that, right? At a point where we have a potential low, high, lower low, lower high, and then higher high right here. Sorry, this is a higher low and a higher high, right? So we have price moving like that, and for this high high here to be formed means that it needs to have broken the previous highs. So we're basically going to be having a so like I said, we need to have a a break of structure in order to print out this new high here. And from this break, right, we'll now have a new low and a new high in which we're going to be focusing on as its own range, right? So it's just going to be within this range of a low to a high. So this is the only place that we're going to be focused on at the moment, right? From this sorry, so let me just put it out real straight here, there. So from that high there to this low right here. So this is the range that we're going to be focused on, right? We want to see price move within this range through an intermediary downtrend towards an area of demand, of course, right? From which that area of demand, we're going to seek for confirmations and go bullish from there to target this high right here as our next liquidity round, of course. Now, with that being said, the part of confirmation is pretty much easy, right? So per se, right, this this range here is on a 4-hour chart, right? So from that 4-hour chart, we'll now just go back a couple of time frames, perhaps to the 1 hour or the 30 minutes or the 50 minutes, right? And from there, we just want to see price tap into per se. So this is, let's say this is our area of demand right here, right? So we want to see price go through an intermediary downtrend into this area of demand, and from here we'll have two options, right? So first, we can we can just take our entry like this on a risk entry module, right? Of course, the disadvantage of this is that your stop loss is going to be a little big and your RR is going to be a little small in general. Or, so this is type 1 schematic, right? Or type 2 schematic is that we'll just wait for price to tap in here, and from here we want to see price reverse. How does price reverse, right? So price reverses when we see a change of character, right? From per se bearish to what? To bullish, right? This right here. So this right here is what a reversal looks like. Sorry, I just want to get this straight. Boom. So this right here is what a reversal looks like, and then you can now take the entries to go bullish from, right? So that being said, from this area here, oops, sorry. So so from this area here, right, I hope I'm just gonna delete this a little bit quicker. So from this area here, what we want to see is price now coming to the top side, taking out this high and forming a high high, right? Then retrace into an, of course, a refined area of demand, right? And from there we can now take our entries and protect ourselves either below the demand zone or below the low, right? And then we can now target the highs, right? Now the advantage of this is that your stop loss is going to be rather minimal, and your RR in general is going to increase, right? Because you might have just a tight stop loss like that, and of course you're looking to target the highs. So this was just a theoretical explanation. So now let's go to the charts and see how practically can this be done. Right, so I'm just gonna go back to auto, and so on here I'm on the pound JPY chart on the 4-hour time frame. And what we have in front of our eyes here is this schematic that I had for a long period of time. So this was my pound JPY setup after price made this range here of a high to a low, right? So I'm just gonna take this in terms of order flow as its own just a single bearish leg. So I was expecting price to make a retracement, of course, into an area of supply, right, which was this overall area here. But since it's too much big of a zone, so I just refined it into this little area that you're seeing here in the 4-hour chart. And from there, I was expecting price to retrace into this area, and we could now see bearish entries from there to target these lows here. Now, what price did is what price does best, right? So price came down, engineered liquidity here, right? We can see there's a lot of buy side liquidity there, but finally price did tap into our zone, right? And now coming to focus on this area here, when price now tapped into our zone, right? So what do we see? So basically we had what was a high, a low, a high, a high, a low, and then this this high right here, right? So after price printed this high here, where did this high come from, right? Where did this high come from, right? We can now clearly see that the low that created this high was this low here, right? Because price made an internal break, created a high, came down, created a low, and then took off to break this structural that previous structural high there. So particularly we were just ranging from this high to this low, right? Now within this range, look at what price does. So price comes down and takes out this low, right, with a break of structure and then printing a new low. Okay, so if now price has printed a lower low, we can now name this our what, our change of character, since price has pushed from bullish to bearish. And of course the low that created this the high that created this low here was this high here, but it didn't hold, right? Well, rather it did hold, but there was liquidity sweep above it. Why? Because we had a range in here, and having a range there means that we have what, we have buy side liquidity resting above that high there, and of course we have sell side liquidity resting below these lows here, right? So price comes down, takes out the sell side liquidity, and then comes up to take out the buy side liquidity, and from there look at what price does, right? So price breaks structure, right? After the change of character, we now see a break of structure that came from a high to create a low, and from there look at what price does. So we had this area here as our area of supply, in which price just retraced into, giving us the entry, and of course going bearish from. And of course, if as a swing trader, if you just take an entry there, then you can hold it to this overall low here and target these highs, these lows down here. But of course you could be taking partials along the way, just for proper risk management, right? Like above these lows here, and of course this break of structure here, and even these lows here, right? So in overall, that's what the strategy was pretty much based on. And with that being said, guys, I hope you enjoyed the video, and I really hope it was very informative to you as well. Now, if it was, don't forget to like, subscribe if you haven't, turn that bell button on for notifications, and until the next one, stay safe, have a nice trading week, guys, and peace out.